Dollar yen. Here, the fundamental picture comes back to the United States, as we don't have any interesting releases from Japan. What can they say about this pair? On the weekly chart, we can see that the pair did once again test 2016 resistance line, but the overall dynamics was negative. The weekly candle is bearish, but some factor which is a bit inspiring is that this candle has a rather long lower shadow. It means that the bulls did manage to improve the situation a bit by the end of the week and close not at the weekly minimum levels but higher. Still, the pair is expected to remain under pressure and remain in some narrow ranges. Here we will have next week the policy meetings of two central banks. So the fundamental background is determined by the market's expectations for the actions of each of the central bank. And from the part of the Federal Reserve, I think that the US currency and dollar yen has already got as much support, as much bullishness as it could have managed. And now traders will look at the Bank of Japan as the main factor, the main driver for the dollar yen. For now, traders don't expect much from the regulator because the monetary policy of the Bank of Japan is already extremely loose. The recent commands of Japanese monetary authorities didn't offer much hints that the regulator plans to act in September. There are some rumors that negative interest rates are already considered in Japan too dangerous for the banking sector, as these negative rates affect the bank's profits. So the Bank of Japan won't cut the interest rate anymore, but it may increase stimulus a bit in order to promote inflation. But we remember that in January, after the Bank of Japan did ease policy, Japanese yen strengthened. So we can remember that the market doesn't actually put much faith in the ability of Japanese central bank to reach its inflation target and to change this overall trend of Japanese yen. Still, support at 100 yen mark looks pretty solid, and it will remain so until the next week. Of course, dollar yen is the currency pair which is the most sensitive towards the Federal Reserve's rate hike. But in the coming days, the volatility shouldn't be very great. Here we have the daily chart, which should give us a bit more insight on how the pair is trading and which levels to watch. We can see that here once again I used these indicators, pivot points, multi-time frame, and for analyzing forex market, for doing the outlook for several days, I use the weekly settings of these indicators. So these red lines are weekly resistance levels, and these blue lines are weekly support levels. The pivot level is located at 102.67. The pair is currently trading below this level, and it means that it is trading on the bearish territory. We see that to start any bullish positions in dollar yen right now, we need to wait until The pair closes above this level of 102.67. Here also lies the resistance line drawn through September highs, and also here we have 50-day moving average. So this resistance is pretty important for the coming sessions, and if the pair is unable to overcome this level, then our attention will turn to the first weekly pivot support mark, which is located at 101.20. Here we have the minimum of September 7th, and also this indicator line. So I recommend to place at least a part of take profit order here. The decline below this level, the close below this level will activate this double top pattern and send the pair towards the recent lows in the area of 199.75. This will be the targets on the downside, and as I said, this support looks pretty solid, so I wouldn't risk setting lower take profit levels. For now, I think this is all the bears may hope to get at this price chart. So if we look at dollar yen, here trading is kind of devoid of immediate fundamental factors. There are expectations for the events which will happen later next week, and here we have technical levels rather distinct, which can be used in trading and in placing entry and exit forex levels.